Hey there, Ken Zorvich, NFM Lending. Hope you're having an excellent start to the weekend. So, a few topics that happened this week. Just wanted to bring some light to help you understand where we're at, where we may be going. So, let's start with buyer opportunities right now in the market. We're at a new year. This is usually a time when buyers come out and hit the market in full force. So, if we follow our normal patterns, we should see buyer activity start to increase. So if you're a buyer or you know buyers that are out there, what should they be taking advantage of? Well, first of all, we're at the lowest interest rates we've been at since about summer of 2022. And when I say lowest, I just mean consistently lowest. There's been a couple times over the last few years where we dipped down briefly within like a week and then interest rates were gone again, right? They had risen. So we're definitely trending in the right direction with that. Down payment opportunities. So a lot of buyers have been asking about down payment assistance, and I say the same thing to every single one of them is we just have to find what you're approved for and what you're willing to live with. What I mean by that is some of the programs are very restrictive on income. Some of them are very restrictive on where you can buy. And so you have to ask yourself, is it worth taking on that type of program in order to buy in a specific area or be limited to a certain purchase price? Now, there's still money left in Hometown Heroes, which is good. There's about 10 million or so still left in Hometown Heroes. So I would say we maybe have about another 30 days or so of that for buyers to be able to take advantage of. And I think that's the best program out there. Now, as far as inventory goes, we are still kind of down inventory than when we peaked in the summer of last year. But I have a feeling we're starting to see inventory rise some. So that's another opportunity where buyers can start to maybe see some more properties come to market. Now, where are we headed with interest rates? That's the next thing I want to talk about because inflation data came out this week and it kind of hit the estimates of what the market was expecting. Nothing too crazy as far as it dropping down. But I think if you're really looking at where could rates be headed, watch inflation. That seems to be the driving force at this point because I kind of thought last year employment was going to play a big role. And employment did have a little run of going up, and we started to see layoffs and things like that. And we may still see some, but it seems like the market's more interested in what happens with inflation. If inflation can continue to ease up and slow down from the levels it's at right now, I think you'll see interest rates follow. Also, keep an eye on what is the government doing with spending. Remember, when the government is spending money, the way they're spending it is they're putting that money out in the form of bonds for the markets to eat up. There's a lot of money hitting the market and a lot of bonds hitting the market right now, not only in government spending, but also corporate spending. So a lot of the expansion you hear of data centers and new AI initiatives, a lot of that's getting financed through bonds. So if you have a massive surge in bonds in general, it's going to drive yields up. And we got to be mindful of that. So watch that. And then finally, I just want to point out Martin Luther King Day on Monday. And in case you didn't know, Martin Luther King was a big reason why we have the Fair Housing Act that took place back in the 60s. So the Fair Housing Act protects people against discrimination from race, gender, sex, religion, disabilities, all these different things that really reshaped our housing market and probably turned our housing market into something that was more profitable than it was prior to. Okay, so things like redlining, which was keeping people out of certain neighborhoods, or maybe steering someone to a certain type of loan that wasn't the best loan for them. Like all of this stuff got corrected, and it was because of the efforts of Martin Luther King. So we thank you, Martin Luther King, for everything that you did to push us in the right direction, and especially for the amount of success you had with impacting our market and our real estate and mortgage industry. So listen, make sure you get in some time with some friends and family this weekend. As always, I'd love to be in this business in 5 years. If you know someone looking to purchase or refinance, please think of me. Have a great weekend.